Hey traders, this is Jeff from ZenTrader.ca with a market update. The theme for this particular video is the markets I believe are running on borrowed time. Let me explain that. My timing signal, it went to the sidelines here after a false up signal here. I believe this is like the 7th, I think, and a couple days later went to the sidelines. Basically, I didn't think that this pullback was in line with the bullish the bullish call here. So I went to the sidelines, and I don't really talk a whole lot about it because for number one, I don't think people are all that concerned. They just want to know whether it's bullish or bearish or sidelines. But there's it's a three-pronged approach to my timing signals, three different things I look at. And the longer term is bullish while the mid and the short term are firmly bearish, and so it's really at odds right now. And if I had gun to my head, which way do I think the markets are going to ultimately move, I think it's going to be lower, but we may have a little bit more upside to go. Like on the NASDAQ, I'm thinking maybe this gap gets filled here, so that would take the NASDAQ up to 29.75. And on the Dow, I think the upside here would be, maybe we do go a little higher from the July highs and take out anybody who's still short. Maybe get these stops to be triggered. So maybe the upside on the Dow is around 13.10, about 13.25 maybe. But ultimately I don't think that there's much more upside left. Now there could be, but my mid and, as I said, my mid and my short term are quite bearish, and that's what leads me to think. And so with having them all, the long term bullish and the mid and the short bearish, there's really no trend. So really there's no edge, and that's ultimately why we're on the sidelines. It's very much like the TSX, where this has just been trendless since May. The best strategy here is to short when it gets to the top end of the range and buy when it gets down to the bottom. But even now, it didn't make it all the way down, and we're basically smack dab. So this is a market that's not even worth paying attention to. Gold has been in this wedge formation since May, and it's kind of doing the same. The best strategy would be short when it gets to this top range and buy. I mean, this would have been ultimately money. But the problem with these formations is you don't really know that you're in this kind of formation until the formation has already been formed. So at this point, the best thing to do is to wait until it breaks down or breaks up to see which way the next potential 1 to 2 month trend is going to be. So there's nothing really to do in this but wait for this. USO, I think we have a little bit more upside. I had put this blog up on my, put this chart up on ZenTrader here a couple weeks ago, and I felt that we would retest this 34.25 to 35.25 range. Maybe it just gets right up, just gets into this range before it rolls over and maybe retest, maybe potentially heads lower. I don't really look that far out, but we are very close to this. The support did hold. That's a good thing, but it looks like we're going to easily get into this, especially if the markets do move up a little bit more. Oil will probably move up a little bit more and then roll over. So I mean, I'm not firmly in the bear camp, don't get me wrong. I'm not just writing the market's ability to basically absorb all the worst macro news you can imagine, not so great earnings. I mean, who knows? Maybe we do head higher, and if we do, we'll start to see some good bullish setups. I got a couple on my list today that I really like. And then there's one stock here. Well, let me finish my train of thought. So again, I'm not firmly in the bear camp. I just think that right now the best thing is to really keep your position small, because there's really, the trend isn't really firm in my opinion. And then one stock pick I like, and I wrote about it on ZenTrader, is I think Fire, even though it has earnings on the 31st, so I would be leery about this, but I think that we're putting in a bottom here. I think this